Hello out there, and good morning, traders, and welcome to the Apteros Daily Market Insight. This is March 13th, 2024. Let's dive into our recap, and then we will update our session plan and levels for today. So you'll notice that our recap's a little different here. I accidentally deleted the old levels from yesterday doing the prep for the community today. So I apologize for that, but I went back and grabbed my levels, and they're the same ones as we had in the DMI yesterday, but I'm only going to cover the relevant ones to the session. We did have another line in the sand that was a little lower, and we had a plan in case this particular bullish line in the sand failed. But it turns out we didn't even need that lower line in the sand because it never really failed for us, and we ended up seeing scenario one play out for the remainder of the session almost into our stretch target. So let's dive into the actual opportunities and what kind of things kind of played out here for us overall in the session. Now, I put out an early prep yesterday, especially because the CPI number was an opportunity for us to monitor the reaction of this fundamental situation from the bullish perspective. We had a bullish context, we had a bullish narrative overall, and the CPI number could have easily shifted that. And we were paying attention to that because it's opportunity for us, especially if that bullish idea would have shifted, and it never did. We came up and tested our main line in the sand here with some volatility. We got a swift rejection from just a probe lower of our line in the sand, and the market started to rally out of there straight into our overall target area here. This is our first target for the session. This was our stretch target up above here. So as we saw that move, scenario one definitely was on the table for the remainder of the session. So this was our first opportunity here off the CPI number, if that's something that you trade. Then we had another opportunity here with a continuation idea off of a neutral reference. Got a nice inflection coming out of it, but it ultimately didn't end up going anywhere. We didn't really see the bulls react here. Didn't really see any of that bullish order flow pressing to new highs or anything like that. So decent opportunity for a scalp, a continuation idea that didn't really get up to our target again or make a new high. Then as the market continued to sell off into our open, we ended up seeing some really nice inflections from our line in the sand area here. And this really was kind of the overall zone to continue with scenario one for that session. And obviously this was the main trade of the session here. This was the big one as it just pressed out of here, stalled for a little bit with no real inflection, like major inflection to the downside, and then pressed right through our first target, making new highs, just crushing through there, going up to our second neutral stretch area there, and then almost hitting our main stretch target out in open space there around the 5240s. So definitely a powerful move coming out of our line in the sand from yesterday, and it's one of the reasons why I wanted to get that DMI out early. That CPI number, that increased volatility, it can make for some opportunity, especially if we're seeing ideas and lines in the sand and areas hold. Then, of course, we end up seeing a nice little pullback here coming into the afternoon. This area here, tricky for acceptance, but if you're using rhythm acceptance, like we explain it, it doesn't really accept to the downside yet down here. But definitely once you get back into it here with some decent buying pressure, an opportunity to possibly continue to the upside here, and that's whenever we end up seeing our main stretch target hit, and we've gone sideways overnight at that area at this point. So pretty wild type of situation whenever it comes to the DMI yesterday. Scenario one, just nailing it and going to stretch targets and so forth. One piece of advice that I usually give people whenever we have increased volatility is you have to really be cognizant of the acceptance picture around these areas, especially what can happen to them is they can wick, right? They can wick a little bit, and you really have to use acceptance like in a very strict sense. Is the move above or below the line? What's the rhythm look like at that area? Are we seeing, pressing and continuation to the downside or not? So like in this particular area here, one way to look at that is, well, here's the move, here's the shortest move, here's kind of the longer move. Neither one of those really are beyond that reference by 50% or more of that leg. And then whenever you're looking at this area here, okay, well, let's monitor what happens here. Here's our first inflection. This is the low that's created there. And we start looking here and say, okay, well, it's holding to the downside up against our neutral reference. What happens is we go to press this next leg. Are we going to press through this low or not? Whenever you don't see that new low getting created and you see the bulls react coming out of there, and then you're coming through your reference with strength, that's kind of where you can make the the read on acceptance and say, well, we definitely didn't accept to the downside, even though we got a little bit of an inflection from that area, and we could get on board with a continuation possible to the upside here to our overall target. So that's just a little bit of advice around acceptance whenever we have increased volatility and kind of how to read some things that are happening around that volatility. Looking at very, very, very low level basic price action, things like that, and kind of understanding what's going to happen as the market develops if our idea is, important. Same kind of thing happened over here, right? So if we got a continuation trade from this area here, we're looking for that inflection. What are we kind of expecting? If the continuation is going to happen, we're at least going to come up and test this high. The fact that we don't come up and test that high is kind of like price action letting us know, especially whenever the sellers really get on board here, price action letting us know that that's the end of the line for that trade. We're not going to see that move continuing to the upside. And then, of course, we kind of do something similar down here where we see two nice inflections, but no acceptance to the downside, and then we really get our bullish move coming out of it. All right, so let me dive into our prep for today. All right, so one of the main reasons why I spent so much time with our recap is because our play for today is pretty straightforward in terms of analysis. This is our main line in the sand for the session. It's a meaningful area for us, and it's pretty binary for our outcomes and scenarios today. So this is our main line in the sand. Scenario one is that we hold that from a bullish perspective. And then, of course, our first destination would be this neutral inflection area here, and then this neutral area up above. So the 52.56 is the overall first leg of scenario one. If we get above that 52.56 and we continue to just move forward, our stretch target is up here around 52.80s. So that's the scenario one. Now, what's some things to pay attention to with scenario one? This first neutral reference here. If we get above that, scenario one has more of a likelihood in terms of analysis to get out to this 52.56s. If we don't get above this neutral area here, scenario one, it's possible that it might just get a little inflection, and then we could come back in here and end up seeing something like this develop for the session too. So gonna have to pay attention to this first 52.43 neutral area there for continuation to the upside or possibly holding in this area here. From there, we take a look at the downside for scenario two. If we end up seeing acceptance down below, similar situation to what we were talking about up above. If we get down below, scenario two is that possible pullback in continuation of the downside. This is our first destination here around that 52.12s, 52.13, or I'm sorry, 52.13 area. If we get below this reference, the downside is much more healthy for a continuation, at least down into that 51.86 from a analysis perspective. So this would be another target here, and then our stretch target down into that 51.76 area would be the overall destination for the downside here. So a couple of neutral targets along the way to the downside if that particular scenario opens itself up for opportunities today. So now we're looking at that full landscape. Just a quick recap here. Scenario one, a hold of our line in the sand up to this neutral area here. If we get above that neutral area, continuation likely from an analysis standpoint to 52.56. If we get up above that and continue to hold our stretch target up here around that 52.80s. If we get down below, we end up seeing scenario two playing out. We get down into this first neutral area here at that 52.12s. And if we get below that, that's a little bit more healthy to the downside as well for some open space in possible retrace back into that 51.86 reference down there. And then if we continue to the downside here, our stretch target being 51.76 area. And this is like the overall context of that trade too. So definitely a couple places along the way to monitor and pay attention to. And that would be kind of the downside scenarios as well. All right, trade well out there, mind your process, and let's get after it.